Hi, this is Jeffrey at Graph Financial. So this time we're going to go into the annual overview of the financials, looking at trying to find out what's going on there. So first of all, revenues year over year 2%, nothing extraordinary, but this is COVID, so you have to understand that. Now, income from operations $14 billion, 44% increase year over year. That sounds a bit bizarre. There must be an adjustment, but we need to do. Income, as they say, excluding the impact of certain items discussed, it would have grown by 24 billion. And they mentioned the same item in the quarter would have resulted in 11 billion. Right? So it's not proportional here. Okay, now what do we have? Adjusted EBITDA increased by 13%. We like the increase because it's more reasonable, but adjusted EBITDA is always a metric here. You look at that with a lot of very skeptical about that, especially because they probably are adding back stock options. It's non-cash. It costs in dilutions. I don't like I always take a portion of the stock option, or even consider stock option as if it were cash, basically, because that has a cost in terms of dilution. People think it has no cost. It's completely false. All right, so that would be go to 147 billion, 21.5 billion, primarily to narrowed EBITDA losses on local. That's good. Narrowed EBITDA losses on local consumer services, international commerce, digital media, and entertainment. All of those are growing parts of the business, not mature. But that's even better. That's good. That is really good. Increase in EBITDA. China commerce adjusted. We have to see the adjustment. If the adjustment, we had the most. We paid people with more stock options, so we have more EBITDA. You don't want that. If it has to be really organic, not some accounting trick. Net income attributable to ordinary shareholders, 10.5 billion. Net income 9.5 billion. So 1 billion difference. One is ordinary, the other is net income. Non-ordinary, we have to find out. And the increase between the two is 17 and 39 respectively. Very bizarre that the two don't grow at the same pace. And due to increased income from operation and decrease in losses, losses from change in fair value of our equity investments. So they have traded equities, and they say we have less losses, but that's you have to value them separately, otherwise you don't have a view of the organic situation. That's below the line adjustment. The above the line was the 24 that's here. We have this 24 adjustment here, you see. And now we have those below the line adjustments, which are, trading securities, equity investment. Decrease in share of profit of equity investment, that's on group. That's probably because they're not risk fine. So that's also blurring the picture. Increase in impairment of investments and the increase in impairment. So that's non-traded equity stakes. So that's blurring the picture. So what I say, non-GAAP net income would have been 20 billion. Okay, but it's just a question here. See, non-GAAP net income would be higher than here, the 14 billion. See this thing between the two? Sounds bizarre. So they say ADS would be. Let me just adjust that. So here it's $4. You probably don't see it, but it's $4, and here it would be 7.94. Okay, which is kind of you wanna. So that's the first part. So but then there is more. There's net cash from operating activities. It's harder to fake. Okay, cash flow 29 billion. That is very expressive, and there are losses from segments that are going to have to be spun off. That is very nice. And free cash flow at 24 billion. That is also very nice. Okay, so that's it for today's review on the overview of the annual. And next time we're going to go into different, re-explain the different partition, how the business is going to be split. And we're going to finish China commerce on the qualitative side. And then that's the next episode. And the episode after, we finish China commerce. China commerce is the biggest part. That's the thing that we really have to handicap properly, because the other parts are growing businesses that represent less of the total. Thank you very much. Bye-bye.